All right. Good evening, everyone. Welcome to another Stock Scores webinar. It's Wednesday night, 6 p.m. Pacific time, and tonight's topic, how to become a stock market day trader. It sort of builds on what we talked about last night during the investor webinar and what we talked about on this last Saturday in my 6 things to understand. And so if you haven't had a moment to take those in, it's not a bad idea to check them out. They are on the Stockscores YouTube channel. So you go to YouTube, do a search for Stockscores. You will find the Stockscores YouTube channel, and the last couple of webinars are on there as well. So tonight is our third, and then we'll have one more on Saturday. And Saturday's topic will be around my different stock trader training courses. And if you have an interest in what those are and how they work, be sure to check in on Saturday. But tonight, it's all about day trading, which is really the thing that I do the most. I enjoy. I sit in front of my screens most days, all day. And this is what it's all about. It's finding stocks that make pretty significant price moves within one day. And we'll talk a little bit more about what day trading is, but the idea is we buy right here on something called an action candle, and I'll talk about this today. This was a stock from today. This was you can see here the date, October 21st. In this case, the buy signal was at $1.24. It closed the day at $1.54 or so, $1.53. And how you find them, what you look for, those are some of the things that we'll talk about tonight. So the itinerary, first I'm going to explain what day trading is, talk a little bit about my story and how I got into day trading. I talked last night quite a bit about my story, about how I became a trader, so we won't do so much on that tonight. I'll talk about my approach, how I analyze the market, how I measure performance, what my typical trading day looks like, what you need if you want to succeed, what will help you to succeed, how I can teach you my approach. And then at the end, we're going to go through today's trades, and I'll show you the income potential from today. We'll use the specific examples that I found today and go through the economics of it. What was the profit? How much capital was required? What was the percentage return? All that kind of stuff. So I will do that today. Today was a pretty slow day. It's actually been a slow last few days. The market's been trending lower for the last 5 or 6 days. I think the market's a little bit worried about the election coming up, and so that uncertainty makes people sort of sit on the sidelines a little bit. So we'll talk specifically about today. I only had 3 trades today. There was some others that I missed, but we'll go through the economics of those 3. All right, so what is day trading? Very simply, we enter and exit positions within trading day, and we are in cash overnight. So by the end of the day, you close out your positions. That's why we call it day trading. We're not holding overnight. When we hold stocks overnight, we call that swing trading. I'll talk a little bit about that tonight. And swing trading is another thing that I teach. But the methodology is very similar to how I day trade. It's just that swing trading doesn't require as much time, and you don't have to dedicate as much time through the day. A little bit longer term, that sort of thing. Ultimately, we are focusing on stocks that are moving abnormally, which is what we do when we are investing. We're going to do the same thing when we are day trading and swing trading, and I will show you that today. The methodology, whether you are a day trader, a swing trader, or a longer term trader like we spoke about in last night's webinar, is all based on the same concepts. And so if you can understand one method, if you can understand how to day trade with my method, you can then transfer those skills to long-term investing. You can transfer those skills to playing cryptocurrency if you are so inclined. It's a very simple approach that has some good math and some good theory behind it, and that's why it works. We can buy stocks. We can make money from stocks going down by short selling them. For those who are not familiar with short selling, it means that we sell the stock first. So we sell a stock that we don't own by borrowing it from our broker, and then we try to buy it back cheaper. And so it's a great way to make money from stocks going lower. And of course, we can do the traditional way, which is buy stocks and try to sell them at a higher price. Most days we're buyers. Some days, especially in the last week, short selling works better. Today was one of the days when short selling works better, but even on a short selling day, there are still things to buy. You just have to be a little bit more selective in what you take. And we do something called trade alpha stocks. I'll touch on that in just a moment. So this is my desk at home. I've got lots of computers in front of me. You don't need all this to start. I can trade from my laptop. When I travel, I bring along my laptop and I can trade from that just as well. But certainly having lots of screens in front of you makes you more efficient. It makes it a little less work because you don't have to flip around on your screen so much. And, when I'm home, I've got all those screens in front of me. One of the things that I do that most people wouldn't do is I also run a webinar every day where you can watch my analysis screen. So if you look on this screen here, this one right here is our active live screen running. And so I'm looking at stocks on my big screen in front of me. I've got other charts on this one, usually more charts than what you see there. And but this screen is where I run the active live service. And I will talk about active live later tonight. But essentially you can see what I'm seeing, what I use to find trades. I've got a very sophisticated system that is probably beyond what most people would do. And I share that with my subscribers. And I'll talk about that tonight as well. All right, so how did I get started? I started trading when I was 19 years old. I borrowed $3,000. Well, I borrowed some money off of my credit card. I had maybe $1,800, and I think I borrowed another $1,200 off of my credit card. Bought my first stock with $3,000 and lost money on the first trade ever. But I also loved it from the beginning, and I sort of kept doing that as I went through university, paid my way through university. At one point, just shortly after I got out of school, I had about $30,000 that I had built up. And then in a 3-month period, I turned that $30,000 into $500,000. And that sort of gave me the nest egg to build my websites and to really start to trade with some real capital. And I've never looked back. I've never really had a real job. The last job that I had was pumping gas at a gas station in Calgary, where I grew up, Calgary Co-op. Some of you that are from Calgary will know the Calgary Co-op gas stations. I used to work at the one in Crowfoot Village there, and I did that while I was in university. I was sort of trading on the side, and then when I left university, I tried to get a job on Wall Street. Nobody hired me, and so I just focused on trading, and that's kind of all I've ever done. Trading and teach people how to trade. I started finding success when I overcame the hurdles, and the hurdles were not knowing what to buy, what to sell. I figured that out fairly early, I would say. My methodology I developed in the first few years of my trading. I'm entirely self-taught. Nobody taught me, and nobody wrote books back then about how to do this. I had to figure it out for myself, so it took me a while. But what the biggest hurdle was not knowing which stocks to trade, but it was to have the discipline to take losses when I was wrong and to let my profits run and to not take marginal trades because of the fear of missing out. The biggest challenge in trading is overcoming ourself and our emotional attachment to money. Human beings are predisposed to fail in the stock market because we have an emotional attachment to money. We hate to lose, we like to win. Fear and greed dominate our decision making. And the thing that took me the longest, and I would say takes most people the longest, is to overcome yourself. And it's simple, but it's not easy. And so a big part of what I do when I teach people is to do little methods and techniques so that your emotions are less a part of the trading decision. But at the end of the day, that is really what separates the great traders from the good traders, or the good traders from the bad traders, is overcoming yourself. You cannot be a gambler. You cannot be reckless. You have to be disciplined. You have to be focused. It's not difficult intellectually. It takes a little bit of time to learn the rules. I can teach anybody the rules, but what is the challenge is to follow the rules. And the most common mistake that I see is that people are not fussy enough. They take trades that are maybe good. They maybe have something good in the, in the trade setup, if you will, but they're not great. And it's very difficult to get to the point where you are so fussy that you only take great trades. You actually make more by trading less. And that is a challenge that people have to understand and overcome. Now, why do I love trading? It's flexible. You can do it anywhere. You can do it anytime. You don't have to day trade every day. You can day trade one day a week. You can trade a couple hours a day if you want, although I do recommend it's better to trade the whole day if you can. But I have quite a few students that sort of enter their positions in the opening hour, put in their stops, and then do their stuff through the day, and then come back at the end of the day and exit their positions. This market's pretty volatile right now, so it is requiring a little more attention than maybe it did before COVID. But yeah, the flexibility is great. You can do it anywhere. I mean, I live in Kelowna now, but I have done this. I lived in Maui for a while. I lived on Kapalua Bay, or not Kapalua Bay. Yeah, Kapalua Bay. In a place right on the ocean, traded from my computers, looking out at the ocean. It was fabulous. Did that for 6 or 7 months. Eventually I got bored of Hawaii and I left. Then I went to Whistler. I love Whistler, BC, Canada, where there's great mountain biking and skiing. And, I love to mountain bike. So I spent some time there. And, that's the joy of this, is that you can do it anywhere. I can travel, bring my laptops with me. I've made trades from cruise ships many times. I've made trades from my phone after riding my bike up a mountain for an hour. And, as long as you have access to the internet, you can do this. I do recommend that if you want to make trading a career, that you sit at a desk and do it. But certainly the technology allows you to leave your screen as well. I often will put on some trades and take my phone to the gym, and I can monitor everything from my phone and actually exit trades if it is necessary. It's fun. I love doing it. I love the analysis. I love the challenge of facing off against other investors, other traders, and beating them. Don't beat them all the time. So obviously, but it's a great intellectual challenge. The freedom, of course, is great, and then of course there's the financial benefit. You can make a lot of money trading. I would say trading is the most lucrative of occupations in the world. The highest paid people, or the highest income earners in the world in terms of an annual income, are traders. Some of the biggest traders make over $1 billion a year. Of course, they are managing very large funds, and people like Jim Simons and Ken Griffin and Steve Cohen. These are great traders that have built up multi-billion-dollar hedge funds. But they all started somewhere. They all started, in the case of Jim Simons, from a 2-bedroom apartment in New York, trading the market, and he built it into a business that has given him a net worth of, I think he's worth about $20 billion now. His company is called Renaissance Technologies, and they're one of the leaders in algorithmic trading. Now, what I do is algorithmic as well. The computer does most of the work, looking for anomalies in the market, and that's what we'll talk about tonight. All right, so my approach is, as I said, I am a strategy-based trader using algorithms. And so we use computers and math to find opportunity. I share with my students my algorithm. You can watch it through the day for a monthly fee. If you are my Active Trader student, you get to subscribe to my Active Live service, where you can see the same screen that I use to identify opportunity running all day long, updating in real time, looking for stocks that are being bought aggressively, and we just jump on board early and ride them up. That's basically it. We try to minimize human judgment, because humans, insofar as trading goes, insofar as money is concerned, are emotional, and I would say often idiotic. Our emotions get the better of us. Our amygdala, that part of our brain that is in fight or flight, or that puts us into fight or flight mode, can really be a disservice to us. If we were being chased by a bear, the amygdala is a great thing. But in stock trading, it makes us do bad trades, makes us make bad decisions. And so we have to overcome that. How do we overcome that? With rules-based trading, strategies that are simple logic-based rules, and then it's just a matter of learning the process to execute them well. So that's what I say there. Make trading decisions based on rules, not emotion. Now, I've been trading for 30 years. The algorithms and the processes that I'll show you tonight, those are my current strategies, and they have about 4 years in development. So when you see what appears to be fairly simple, understand that there have been 4 years of work that have gone into those. I started building these algorithms when I was living in Hawaii in 2016 because the market changed a lot. Exchange traded funds took over. They took a lot of the volatility out of the market, and we had to be more competitive than we were in the past. In the past, I had a much simpler approach because the market was easier. And then with the rise of exchange traded funds and other computerized traders, we had to raise our game to compete with them. And so I started building my algorithms again when I was living in Maui, and those have been 4 years in the making. Now, what's kind of awesome is I did that because the market was less volatile. You had to be sharper. You had to be better to make money in the market. But what happened with COVID and the crash that came with COVID, and I would say to some extent Trump as well, is that volatility has come back to the market. We had a 5-year, almost 10 years of diminishing volatility because of exchange traded funds, ETFs. And with COVID, volatility has come back. And, it used to be that in a week I would get 2 or 3 stocks that made, what we call reward for risk gains. And I'll talk about reward for risk later tonight, but that made these reward for risk gains of greater than 10, greater than 15. In a typical week, you get 2 or 3 of those if it was a good week. Nowadays, we easily get 2 or 3 of those a day because there's just lots and lots of volatility. There are lots of new traders in the market. Millions of new accounts have been opened in the last year. And that is all because of the volatility that comes with COVID and the fact that many people are able to spend time at home and they can trade. And so there's a lot of what I will call, I hate to use the word stupid money, so I won't use stupid money, but rookie money in the market. People that really don't know what they're doing. And when the market was making that really great rally from, say, end of March, early April till July, August, it was easy. Anybody could make money in that market. Now it's getting a little harder again. There's a little more sideways action. You got to be sharper. And I think that a lot of those traders who thought that they were smart, who had it all figured out, are starting to give back a lot of their profits. There was a character back in the 80s in the Vancouver mining stock scene. His name was Murray Pezim. And he used to say that profits in the stock market are just short-term loans because most people eventually lose in the market. And it's because they don't know what they're doing. There's no barrier to entry in the stock market. Anyone can open a brokerage account. And when the market's hot, it's easy to make money. People get lucky and they make it. And then they ultimately give it back when the market sort of normalizes and they realize that they really don't know what they were doing. They were just getting lucky. So my aim is to teach people how to do this properly. I've been trading for 30 years. I've been doing it for 20 years, teaching for 20 years. And you don't last that long by going broke, obviously. So I've never had that. I shouldn't say never. When I was in my teens and my early 20s, I did lose just about everything. I got it all back eventually, but I did have one cycle there in my early, maybe second or third year of trading where I put just about all my capital into one stock that ended up getting halted. And that was not fun. And it was a lesson learned, right? Nowadays, I always tell people, my students always say, your number one goal is capital preservation. Number one goal is capital preservation. So that's a real big part of what I teach. All right, so how do I measure performance? Now, I need to explain this first because we're going to talk about what we call the reward for risk ratio throughout tonight. And at the end of the presentation, again, I'm going to go through the trades that I found today. I'm going to go through the economics of them, show the percentage gain and all that kind of stuff. But in order to get there, we have to understand some of these theory things. So the reward for risk ratio is a measure that I use for determining performance. And I'll show you on a chart how we do that. Our number one goal, as I said, is capital preservation. Our number two goal is making money. Our number one goal is to make sure we don't lose all our money. And I will teach you things that maybe sound boring or kind of too conservative, but if you want to stay in the trading business in the long term, you have to manage risk. And if you don't, eventually you will go out of business. It's just the nature of risk taking in the stock market. So the way that you make money in the market consistently, maybe not in the short term, but in the long term, if you want to make money in the long term as a trader, you have to have small losses and big profits. And I know that sounds really obvious, but it's remarkable how many people are not willing to take small losses. They'll hang on to their losers, hoping that they will turn around. And those small losses turn into big losses and becomes a real problem. So we got to make sure that we manage risk effectively and know when to take the small loss. And I'll show you some examples tonight of how we do that. At the same time, we want to lock in as big a profit as we can when we are right. We are going to be wrong some of the time, we're going to be right some of the time, but when we are right, we have to let those profits run. And this is, again, a challenge for normal human beings because normal human beings want to take the profit off the table at the first sign of weakness for many people, for fear that it will turn into a loss. And we have to let those profits run until there is a sell signal. Your success rate in trading should not be your focus. You know, we're trained with school in many ways that we want to be right most of the time. You know, in order to get an A in school, you need to get, 80% on your test, maybe 85%. And in trading, you don't get an A by being right 85% of the time. In fact, you can make lots of money being right 50% of the time. The difference, though, is that when you are right, you make a bigger profit. And when you are wrong, you take a smaller loss. Now, I try to be right 60 to 70% of the time. That's my goal. But I also try to have profits that are double the size of the loss. And if you do that over and over and over again, you make good money. So do not be focused on being right. Focus on making money over a large number of trades. And do not judge your success in the market one trade at a time. Judge your success over a large number of trades. So how did you do over the last 30 trades, not over the last 3 trades? So here's another example from today. This is CAN, gave an entry signal right here. Oops. One of my students found this one right at the open, and she typed it into our active live service, which is where I'm monitoring the market again with my algorithm. She was monitoring the same screen that I was, found this one. It was a perfect setup. And the way that we manage risk on this is with these lines. So our entry price here was at $2.04, and we would plan to lose if the stock fell down below that low right there. So then we do the risk management part of the calculation. If we're going to buy that stock at $2.04, and we're going to plan to lose at $1.94, which is a little bit tight, but let's just for simplicity use that number. That means that we have a risk per share of 10 cents. Okay, $2.04 minus $1.94 is 10 cents a share. That's our risk per share. So if you buy 1,000 shares, 1,000 shares times 10 cents a share is equal to $100 of risk. Now, do you tolerate that much risk? If you are willing to risk $100 on a trade, then you buy 1,000 shares. 1,000 shares of a stock that is $2.04 costs you $2,040. So you're taking a position size of $2,040 and you have a risk of $100. Now we'll come back to the economics of this particular trade at the end of the presentation tonight, but that's how we judge risk. Now then there's the reward component. So you'll notice that I've got these green lines on here. These green lines represent reward for risk ratios. So if I buy at 204, when it gets to 209, that is a reward for risk of 1. 214, reward for risk of 2. 219, reward for risk of 3. If it was to fall to our stop loss point at 194, our risk would be -2. So the actual loss would be $200 at that level. And again, I'm going to go into the economics. I've got big spreadsheets that show all this stuff. And so what we're trying to do is have an average profit over a large number of trades that is around 1 RR. That includes the losses. So let's say out of 10 trades, we have 3 losses, and the average loss is -1.6. And then we have 7 trades where the average profit is 1.2. We can calculate our average profit, our average reward for risk. You could do that quickly. I'll do it in my head. That's 7 times 1.2 is 8.4. 3 times 1.6 is 4.8. So that's going to be not quite what we want, but this would be 3.6. So 3.6 over 10 trades. So your average profit in this scenario would be 0.36. Now, if you don't understand the math that I just did in my head quickly, it doesn't matter. I'll come back to this later, but that's not a particularly good winning ratio. I mean, 3.36 is okay, but we try to do better than that. We try to make this average around 1. All right, and again, we'll come back to this later. This is just the basics of how I do risk management. We have a whole module, about a 1-hour lesson on risk management in the course material, which I'll talk about later as well. All right, so what is my typical trading day? Well, before the market opens, I do my pre-market assessment and sort of plan my day. And I do that 5 minutes before the market opens. It takes me a minute to do. And if you are a subscriber to my active live service, then you'll hear my voice at about 5 minutes before the market opens, giving that assessment. So my assessment today was, okay, we're in a downward trend on the 30-minute chart. We're going to open up, so that's a good sign, but we should not ignore that we are still in a downward trend, and therefore we can short sell stocks, or we can buy what we call alpha stocks. And I'll talk about alpha stocks tonight as well. I talked about that a little bit last night, but alpha stocks are essentially those that are trading abnormal volume and breaking from low volatility. So all of the trades that I found today on the buy side were alpha stocks. But most stocks today were not worth buying because the overall market is in a little bit of a downward trend, of about a 5-day downward trend, and we want to wait until that trend is broken before we get too aggressive on the buy side. Now, I'm a strategy-based trader. I've got a number of different strategies that I do. One is called the day trader strategy, which I will be showing you some entries from tonight that came today. I'll show you those tonight. We have a strategy called the wave strategy, which is a new one. It's actually an old strategy that I revived in the last couple of months because the volatility has come back to the market. I'd kind of put that strategy on the shelf because the volatility was so quiet for the last few years, but I've taken it out of retirement because it's working nicely again. And so that's another one that we do throughout the day. We have something called the superheroes, which we do throughout the day. There is a swing trading strategy we do that gives us entry signals every 13 minutes. I'm going to show you the screen that I use to find all these things in a bit. So that's a swing trading strategy where we hold those stocks for maybe a few days, sometimes even a few weeks. And then we have a longer term swing trading strategy called the Stockscores Abnormal Breaks strategy. And we look for those in the last hour of the trading day. Again, what we're trying to do is minimize human judgment. We want to have a very logic-based, mechanical approach that doesn't require a whole lot of human judgment. It does still require some. We still have to, do a read of the market, the read of the chart pattern, but I can teach you how to do that. All right, so here's another example. This stock is a day trader strategy trade, and we use something called action candles, which is my algorithm, my indicator. And this stock gave us an action candle right there, very strong, tall price move. Remember last night we talked about abnormal activity and the importance of abnormal activity for finding alpha stocks. And when we did the webinar last night, we were looking for those on a daily interval. So we were looking for stocks that for the day made an abnormal move up with abnormal volume. Well, we can do that with day trading as well. We just look at a 2-minute chart. You can see up in the upper left here, this chart says 2-minute. And so we monitor a 2-minute chart. I'm using some software called TradeStation, but your broker has software that'll give you charts. TradeStation, I think, is a great program. Nothing to do with me, but something that I subscribe to and use, and allows me to look at any stock and look for these 2-minute action candles with my indicator. Now, the action candle is my own indicator. I came up with that indicator a number of years ago, and it's got some pretty good math behind it. It looks for statistically significant abnormal price and abnormal volume. And what we find is that when stocks make these action candles, after a period of boring sideways trading like we see here, they often go up. And in this case, you can see the entry price was 43 cents and it closed the day at 50 cents. That may not sound like a lot, it's just 7 cents, but that's 7 cents on a 43-cent stock. So that's, about 17% in one day. I'm quickly doing the math in my head. We'll actually calculate the return on this a little bit later. All right, TLGT is a swing trade. So this is where we look for action candles on the 13-minute interval. So if you notice up there on the left, it says 13-minute. This is 1, 2, 3, 4 days of charts. And you can see that this stock was doing absolutely nothing, really boring. And then it came alive with an action candle. There's abnormal volume, abnormal price movement, and this stock shot up from 74 cents to $1.05 in the span of a couple of hours. Now, if you saw that happening, you'd say, oh, something's going on. But the problem is there's 7,000 stocks on the US market to watch. You wouldn't be looking at this one. You might be looking at it after it had gone up a lot already, but by that time it's a bit late. So what the computer does is it monitors the entire market for us, looking for action candles. We look for action candles on a 2-minute interval and a 13-minute interval. The Stockscores website does it on the daily interval. So when we're looking for investment opportunities, longer term trades, we use the Stockscores website. When we are looking for them on the short term time frames, like a 2-minute or 13-minute time frame, we use TradeStation. And I've created these indicators. I share them with my students. And then I also have a webinar that runs every day where I've got the computers doing all the work, and you can watch that to see when these stocks are triggering these action candles. It's a real important component to my approach in the market. Now, I said we can look for action candles on the daily interval as well. And this is an example right here, a stock that we picked a couple weeks ago now, almost 3 weeks ago. And if you read I think it was in my weekly video or my weekly newsletter, which are both free things that I do. You can subscribe to my weekly newsletter at stockscores.com. You can subscribe to the YouTube channel, the Stockscores YouTube channel. I put up a new video every week, and I pick stocks, just once a week for you. But the emphasis is to try to teach you how to do this and show you examples. This is an example of a stock that broke from an ascending triangle with an action candle, and that was at $2.97. Now it's at $4.25 today. So that is the longer term style of swing trading, where we use the daily interval. All right, so what do you need in order to do all this stuff? Well, of course, the first thing you need is knowledge. You cannot trade the market successfully in the long term without knowledge of knowing what to do. Now, I would say that there were people in May and June, maybe April, who were doing quite well in trading without a lot of knowledge, because the market was moving up so sharply that you could throw darts at a board and do well. Now, market's starting to normalize. We still have lots of volatility, but we're not getting that crazy upward trend like we had for a few months there. And so now knowledge is more important than ever. You need to understand the basics of how the stock market works. You need to know how to analyze stocks. There's many ways to do it. I can teach you my way. My way is pretty simple. Risk management, we talked about that tonight, but you need to know how to do that. I've touched on it a little bit. Money management, also something we've touched on so far. And then you need to know how to develop a strategy, or you get a strategy from someone who has developed one. I've developed strategies. I basically sell my strategies through my courses. And if you have an interest in buying my strategies, then I'll give you the opportunity to do that. If you want to develop your own, then you have to know how to properly develop a strategy. And my courses actually will teach you how to develop strategies as well, but most of my students just use mine. And then you need the mechanics of the step-by-step process to actually find the trade, do the risk management quickly, execute the trade, using hotkeys with your brokerage platform, knowing how many shares to buy. That's part of your risk management and your risk tolerance. Knowing what stocks to buy, that's the strategy itself. And then just being as fast as possible. When you're day trading, speed is important. And when you are, longer term trading, you don't have to be so fast. But when you're day trading, you got to be fast. And there's some tricks and techniques that you can do to do that. So let's talk about the strategies. I will teach my students my strategies. Strategies should have rules for when to enter, when to exit, how to size your position, and manage risk. Those strategies should be well tested across many different market conditions. They should be tested over a large number of trades. You should understand, even if you're, let's say you're using one of my strategies, you should understand the theory behind it so that you are making those trades with an understanding of why they are working. I could just tell people the rules and let them follow the rules to try to do those trades themselves. But I spend a lot of time teaching the theory behind the rules, the theory behind why my strategies work. And it's based on very good theory. In fact, 2 Nobel Prizes have been won on the concepts that I use for my trading strategies. You have to understand the backbone of those strategies. So I spend a good amount of time teaching that in the foundation material, which is the theory. And then ultimately, we can use the power of statistics to identify the very best rules for our strategies. So what I do every single day, and I've done it for years, is I grab, using some computer processes, I put into a database all of the stocks that triggered my action candle. I've talked about my action candles tonight. So my action candle is the core, and then I've got some other rules, and I capture the values of those indicators for every stock that triggers an action candle. And that all goes into a big spreadsheet that looks like this. It's pretty boring. It's got thousands of lines of data. And from that, we can modify rules and test things to come up with the best combination of rules that works consistently. And so we're always fine-tuning our rules based on data. I do not trade based on gut instinct or hunches or stock tips or what someone on the TV said. I trade based on data. And I've got, as I said, thousands and thousands of lines of data in these big database spreadsheets that I've built. And every day I add to them. So you can see this is October 16th. I did this today. All of that data went into the spreadsheet today. And from that, I can spit out my performance numbers. And so what this is here is a breakdown of the performance of my strategy every half an hour for these different dates. Now, I'll just explain this here. On this side is the buy signals, and on this side is the short sell signals. Some days we focus on buying. Most days we focus on buying. Some days we focus on short selling. And what the database does is I can pull out what the performance was based on what the overall market was doing. Because most of the time we want to trade with the direction of the market. And one of the things that I teach my students is something called market factor, which has been less important these days because we have lots of volatility. Prior to COVID, we worried more about what the market is doing, but nonetheless, it's still somewhat important. As I said today, I wanted to be cautious with buying and be looking at shorts in general because the market's trending lower. But the way this works here is, so for example, the 15th of October between 12:30 and 1 o'clock, there were 3 buy signals. The average RR, the average reward for risk of those 3 was 3.49. So that means for every $100 of risk, it made $349. And the total RR was 10.46. Now that's a very good half an hour interval. It's quite dark green. You can see that it's a bit color coded here. And so what we then can do is we can go back to October 15th and look at what the overall market was doing between 12:30 and 1 and say, did that contribute to the performance? Or was it simply the case that there was a really strong winner in there that skewed the results? So those are the kinds of data analytics that we do. Now, for the day on October 15th, we had 49 buy signals. They averaged a reward for risk of 0.79 and had a total RR of 58.8. Now, most people aren't going to take 49 trades. In fact, almost no one takes that many. But it's just, again, the statistics to demonstrate how the strategy works over time. On that same day, on the 15th, you can see that the shorts did not work very well. There's lots of red here. Now, there wasn't very many trades that were great, but the market was trending upward from the open that day. The market gapped down, I believe, on the 15th. I'm just looking at the screen here. Yes, it gapped down at the 15th. And so my comment that morning was, let's favor buys at the open because we are oversold and likely to bounce back. And that's exactly what the market did. The buyers won the day. All right, so that's some of the data analytics that I use. And I share this spreadsheet and these data analytics with my students. If you are a subscriber to my Active Live service, you can download this spreadsheet, update it every day as all part of the service that we offer. All right, so another thing you need is tools. So we have a number of tools that we use. I like to use Stockscores for my longer term trading. I use TradeStation for my short term trading. TradeStation is something you have to subscribe to. And again, I have no interest in TradeStation. I'm not an owner of it, or I have no financial relationship with them at all. I've just been using it for probably close to 20 years. Maybe not 20, 15 years, I think I've been using TradeStation. And it's a great program. I use it every day. Using it, it's a real key component to how I find opportunities. I highly recommend it. But my students do not have to use TradeStation, especially when they're learning. It's something that's sort of a tool that you would use if you maybe want to make a career out of stock trading. It has a cost. It's about $99 US a month. If you are in the US, then you can probably get TradeStation for free by opening a brokerage account with them. I'm in Canada. We're not allowed to open a brokerage account with US brokers. So we have to subscribe to TradeStation, and it's $99 plus exchange fees. So it ends up being about $110 US per month. But as far as I'm concerned, it's a cost of doing business. You know, if I was going to open a restaurant, I would pay rent for a restaurant location, and that way I can sell food, right? And in trading, you know, your platform and your data fees are like your location fees in a restaurant. It's part of the business, and I treat it like a business. I start a corporation. I have costs, business costs. I have inventory that I buy and sell every day. It's very simple business. You buy and sell inventory every day. You try to sell it for more than you buy it. There's other real-time charting programs out there. There's some good ones. One is called TradingView, which is a pretty low-cost one, and it's a good platform to learn on. I think if you're going to get serious about trading, it's probably better to use TradeStation. Another good one is TC2000. There's others, but those are the ones that most people tend to use. And then, of course, the brokers will also have charting programs, and they often give those to their clients for free. So I use a broker called Interactive Brokers. They've got a pretty good charting platform. TD has the Thinkorswim platform, which is pretty good. And there's others, lots of brokers out there, and they all have their own charting platform. But again, my favorite, if you were to ask, is TradeStation. My favorite for longer term trading is Stockscores. Now, if I just jump in here, this is TradeStation right here, and it has these things called studies. This is something called a radar screen where I can monitor the whole market looking for action candles. I can plot action candles on a chart. I can look at charts on the 2-minute interval, the 13-minute interval. If I want this to be the daily, I just type the word daily, click, and it's now going to be a daily. Oops, I got a little error message there. So it's an awesome program, but it's really a program for the more serious trader. If you're just starting out in trading, you don't need this. There's other tools you can use, something you move toward over time. You then need an order entry tool. So again, that's with your broker. And so if you have a brokerage account, they're going to give you a platform. There are two types. There are web-based platforms where you do your order entry on a website. And then there's software-based platforms. So you install some software. It allows you to buy and sell stocks through that platform. I prefer, and I would recommend if you are going to be a day trader, that you use a software-based platform. They will tend to be faster. They will have more features, more reliability. Websites are fine for longer term trading, but for day trading, I highly recommend using a software-based platform. And again, if you are in the US, have an account with TradeStation, that's a platform. Thinkorswim, Interactive Brokers has a platform. There's lots of them out there. Every broker has their own order entry platform. I like to do post-trade analytics, and you saw I had some Excel spreadsheets that I use. There's probably better tools for big data analysis, data analysis tools like SQL or maybe even Access. I use Excel because I'm not enough of a computer geek to be able to use some of those more sophisticated data analysis tools. So I do what works for me, and what I do is pretty simple, but it works. It gives me the answers I need. Maybe not in the most elegant way, but it still does it. I know that many of my students have a lot of knowledge in data analysis, and some of them send me some great data analysis that they do, and it really helps me to fine tune the strategies. And of course, I always welcome that. It helps me to improve my trading as well. And I am also using a tool called Active Trader Live, which is a service that I offer to my students where you can watch my analysis screen running in real time. It's the same analysis tool that I'm watching. You can watch it as well over the web via webinar. And I provide some commentary. So in the opening half an hour of the day, I tell you what the game plan is for the day. I teach every day. I teach something. I do a few videos a week. So it's a nice tool to keep the learning going after you take my course. Now, what do you need? You also need process, a step-by-step plan for implementing the trading strategy. You can have the best rules in the world, but if you don't have a good way to implement those rules in a mechanical, efficient, non-emotional way, you're not going to do well in the market. So process is very important. Make sure that you define that or learn it from someone else. Now, my process is as follows. I always look in the pre-market, what is sort of the market factor? Should we be buying? Should we be short selling? Most days, as I said, we buy. Even today, I was willing to buy, but I had to be fussy today because we're in a downward trend. And so the market sort of favors short selling in a downward trend. But you can still make money buying stocks if you focus on what we call alpha stocks. And again, alpha stocks are those that trade with abnormal volume and with abnormal price activity. And every day there's some. TLGT, which I showed you earlier, was an alpha stock. The three stocks that I'm going to go over at the end of this presentation as examples, just as a way to show the economics of trading, they were all alpha stocks, and I'll show you the characteristics when I show those later. Once I find an action candle, I then assess that stock for the satisfaction of my other rules. It's got to be breaking from the right kind of pattern, not have resistance on the longer term time frames. All of these things that I teach in the active trader course. Then enter the trade based on the risk management I've done, and then just monitor the trade for exit signals. Sometimes I sit there all day and monitor my stocks for exit signals. That's hard to say. And other times I've been known to sit at Starbucks with my laptop and I monitor it remotely, or from my phone. If I don't have many positions, I can monitor positions from my phone. A lot of these brokers have mobile trading apps, so you can actually exit stocks from a cell phone. So you don't have to be tied to your screen all the time. I think you make more money if you are in front of your screen, but sometimes life calls and you got to go do some things. So I'm always monitoring the market for a change of the market factor focus. And again, Active Trader Live automates a lot of this process for you because it's doing the calculation of the algorithms. It has automated processes that grab all of the stocks that are candidates for buys, runs them through analytics, spits out every 2 minutes a list of the stocks making action candles, or for swing trades every 13 minutes. Now, of course, you also need capital. And people always ask me, how much money do I need to trade? So let me talk a little bit about that. I recommend that everybody, no matter whether you have $100 to trade with or $100 million to trade with, everybody start trading with $0 because you need to learn. Trading looks really easy. It's not. Well, no, it's simple, but it's not easy. And it takes time to learn. It's like anything else. If you want to be a lawyer, you go to school. You want to be a doctor, you go to school. You want to be a hockey player, you practice and train. And 12 years later, you might be ready for the NHL. Trading takes time to learn. It doesn't take 12 years. You can learn how to trade in months if you're dedicated, but you should not trade with real money until you have learned, until you have practiced, until you have demonstrated that you can be profitable on paper and build up your confidence. And once you do that, then you can start trading with real capital. And the way we define how much capital you need is you take your risk tolerance. So let's say you're willing to risk $50 a trade, then multiply that by 200, that's $10,000. That would be a general rule. Now you can trade with less, but if you want to take quite a large number of trades each day, you need to use that formula. If you're only going to take 2 or 3 trades a day, then I would take that number and multiply by maybe 100, maybe 75 to 100. It really depends on the types of stocks that you want to trade. And again, at the end of the presentation, I will show you how much capital you needed to do those 3 trades today and how much they made and what the percentage return on your capital was. Now, we have a simulator at tradescores.com, which is my other website, that you can use to practice. You can also just build an Excel spreadsheet or even just write it down on paper, but practice before you trade. As you get successful, increase your risk. So start with 0, and then maybe start with $50 a trade of risk, and then $100 per trade in risk, and then $200, and slowly build up your risk as you find success. That way, you are using your profits to protect yourself with the risk. You're always going to take some risk, but it would be nice if you start to build some profits, and that is ultimately what you're risking. And then if you're having some failure, let's say you have a bad run and you lose some money, then lower your risk, scale it back, and figure out what you're doing wrong. And as my student, anytime you're having a hard time, fire me an email and let's figure it out. I do that for my students. I'm happy to help. So what helps you succeed? If you want to make a real go of this, what does it take? As I said, trading is simple, but it's not easy. You need to walk before you run. Take the time to learn. Don't rush it. It requires practice. Trading well requires focus. It is like anything else. It takes determination. If you want to build a fit body, you got to go to the gym and you got to do the work, right? If you want to be good in your occupation, then you got to do the work. There's just no replacement for doing the work. Now, the one great thing about trading is You can do that work from home. You can do that work from the beach. You can do that work from, a hotel if you're traveling. It's a cruise ship, whatever. But you still have to do the work. There's a lot of freedom in this game, but um, you know, if you think that money's going to fall in your lap and you're lazy, don't be a trader. Don't be a gambler. Follow a strategy. So how do you become a day trader? Well, what I did is I developed and I tested my own strategies. And in the first 8 years, I made enough to pay my way through university, but I wasn't really successful. Wasn't making a lot of money. And I was making stupid mistakes, mostly because of a lack of emotional control. Now, after 8 years, I started to get it going. As I said, I turned $30,000 into $500,000 in 3 months. And that sort of was real confidence builder and gave me some real capital and started my business. I was able to use some of that money to build my own tools because I had a very cumbersome, time-consuming process. And so I took some of that capital and built Stockscores, which is not a cheap tool to build, let me tell you. So all of these things are part of the process. Now, I don't recommend it you do it that way. That's a lot of work. I wasted a lot of time, wasted a lot of money. The easier approach is to learn from someone that's done that work already. And so if you want, I will teach you my method. You're going to take my 30 years of experience and I put it all in my course material, my videos, my online lessons, all of that stuff, my daily commentary in active live, the videos that I do. Like I said, I do a couple a week for my subscribers. So that's how I can help you. I'm not telling you have to. You can go do it on your own. I just think it's way better, cheaper, and quicker to learn from me or somebody like me. If I think about what I've invested in developing my TradeStation indicators, it's well in excess of $10,000. I don't even want to think about what it is, but it's a lot. Not to mention my time. That's just in what I've paid to programmers to write the code for my indicators. Now you can go do that yourself, but why? I'll give you my indicators as part of your course package. Don't go spend 10 grand. I'll give it to you at a way better price. So let's now talk about how you learn my approach. I have an online education center. It's called the Stockscores Education Center. We showed this last night, and I'll quickly show you again. You go into the Stockscores website. If you're a member, you can log into the education center. You go right here. And here we've got some free lessons, so anybody can watch these. These are videos. That's the getting started area. Then we have the foundation, where you can learn my theory. And in that area, there are written lessons, there are videos, there are assignments, and there are tests. And you get a score, and you can assess whether you understood what to do. And there's, I don't know whether there are about a dozen lessons there. The longest one is an hour. Most of them are 20 or 30 minutes. Then we have the investor strategies, which is what we talked about last night. These are my rules for when to buy, when to sell, how to manage risk, the process, all that sort of stuff. There are written lessons and videos for most. And then there are the active trader lessons. So we've got the wave strategy, the superhero strategy, the intraday pullbacks, the day trader strategy. Also have a section on how to use TradeStation, active trading with TradeStation. So there's some lessons on how to use that software program specifically. The wave is brand new. I just uploaded this, so I don't have the video yet, but I'll have the video soon. All right, so that's all the online material. So we have the foundation section, the investor section, and the active trader section. What section you have access to depends on which membership you buy. So the investor course gives you access to the foundation theory lessons. It gives you access to my investor strategies, to the investor market scans that we used last night. You get email support from me. I only teach about 100 people a year, so I don't have people answering email for me. If you have a question about the rules of a strategy or about the theory or what have you, just fire me an email. I usually get back to people within a day. I'm a little delinquent this last week because I've been so busy, but I am going to get caught up soon, and I apologize if you're one of the 3 or 4 people that I still owe an answer to on your email. I'll get it back hopefully tomorrow. And then you get 6 months access to the Stockscores Market Scan tool, and then it's $300 a year to renew that. So the first 6 months are included in your course fee, and then it's $300 a year. And again, I talked about this stuff last night. You can watch last night's video on my YouTube channel. The Active Trader course, you get everything in the investor course that I've talked about, plus you get access to the Active Trader strategies as well. You get access to the Active Trader market scans as well. You still get email support from me. You still get 6 months access to those tools, but you also get my real-time indicators for TradeStation. So again, I've invested thousands of dollars in programming fees, plus hundreds of hours of my time into these indicators. And when you buy the course, if you decide to use TradeStation, I will email those to you for free. Well, I guess not for free, you bought the course, but as included in the course. Being an Active Trader member also means you are eligible for the Active Live service. So the Active Live service runs every day, 5 days a week, during market hours, starts 5 minutes before the market opens, and you watch me create and monitor the market for day trades. So I've got algorithmic processes, watch lists that build throughout the day. I'll show you what it looks like in just a moment. It's real-time alerts, live webinar. I talk for the first half an hour and the last half an hour. Lately, I've been doing 1 or 2 days a month where I talk the whole day just to coach you through the whole day. But most days I don't because I'm trading myself and I need to focus. So first half an hour, most days, last half an hour, I talk, explain, tell you what to do, teach you a little bit every day. Again, automated instant trade signals. You're seeing what I see. I do the work. My computers really do the work. And we focus on making our trades as opposed to finding them. The computer finds them. We then focus on making them. But again, this service is only available to Stockscores Active Live Trader members. I don't want 1,000 people using this tool because it takes away the opportunity. We keep it small so that the opportunity is not taken away. So this is what the Active Trader Live screen looks like. And I'll give you a quick rundown of what you see here. So this window over on the left are the 13-minute action candles. So you have the time that it made the action candle, the price, how much capital was required to make that trade, the number of shares, and then the performance. This window right here is a chart of the S&P 500 because we like to monitor that for our determination of whether we should be focused on buys or sells. This window here is the most used one. This is our buy signals for the day trader strategy. So it shows us the action candles by time. Now I've sorted this by performance. So the biggest performer of the day was AMCX. It triggered an action candle signal at 12:22, but it was quite capital intensive. This trade took $39,000 of capital. Now it returned $1,700 of profit, but still to me not a great trade. The one below is better, TLGT, which I showed you earlier. It required only $3,600 of capital and returned $1,600 of profit. So almost a 50% return on that trade today. So that's the middle screen, our long buy signals. This screen down here are what I call my 7 out of 10s. So I give stocks ratings. I'll give it a 6 out of 10, a 7 out of 10. When I'm calling out trade ideas, I find the simplest, quickest way to give people an impression of how much I like it is if I just give it a score. And so a 6 out of 10 means I think it has a 60% chance of working. 7 out of 10 means a 70% chance of working, so on and so forth. So I put in this window the stocks that I think are at least 7s. And today there was only 3 that I found. Then over here we have our short sell signals. So some days we want to short. Today was a decent day for short selling. This window here is for the other day trading strategy. It's called the wave strategy. It's a strategy we apply to very actively traded, mostly large cap stocks. It's for people that maybe have a bit more capital to trade with or who want to be trading a little bit bigger position sizes. The wave strategy is really good for that. So again, more signals there. That's a fairly new one. I just uploaded the lesson on that last weekend. We've been talking about this strategy for a couple of months on Active Live, and building some new tools. I actually have a new version of the indicator for this strategy. You see there, it says Stockscores Wave version 1-1. So I just have version 1-2, which I will be using. I don't know if I'll do it tomorrow, but soon. And it's got some improvements to make it run a little better. All right, so that's the active live screen. That runs all day long. During the day, it blinks and it moves, and you hear my voice and that sort of thing. Now, one other course that we have, I do this once a year, and that is the Stockscores Mentorship. If you would like me to guide you through all the course material with weekly 1-hour classes, then the mentorship is what you need. It's the same material as you can learn on your own. I probably go into things a little more in depth. We're going to do 14 1-hour classes, or at least an hour. Some might be a little longer. It starts November 10th and it goes until February 9th. We take off a few weeks over the Christmas holidays because people want to travel or what have you. So from November 10th to February 9th, every Tuesday from 6 Pacific time until 7, we're going to do an hourly meeting. I teach you something. I give you an assignment often. We sometimes review the previous week's assignment. So it's just a hand-holding through the learning process. It costs more because I do more for you, and it's also limited to a relatively small number of students. I only do this with 20 students per year, and currently we have 8 spots left because I've already had 12 people register. And so first come, first serve, and I'll tell you how you can register for that in a minute. I walk you through the strategies, the processes, capital preservation, emotional control techniques. Every week is a different topic, and I'll show you where you can see the topics. You also get, with this program, 2 months of Active Live instead of 1 with just the Active Trader course. You do the mentorship, you get an extra month. That in itself is a $390 value, and it's really for those who aspire to make a living from trading the stock market. Because I have a small number of students, I can answer your questions each week a lot more personally, and hopefully help you speed up the learning process. So twice a year, I do some extra live training. So that's starting again in November 3rd. If anyone that has bought my investor or active trader courses since May, so if you bought my course in June, you get this still. If you buy it tomorrow, you get this. So anyone who purchases one of my courses before October 30th, day before Halloween, Friday, you will get this stuff included. So I'm going to do 2 foundation theory overview classes for about an hour and a half each night. So Tuesday, November 3rd from 6 till 7:30, and then Thursday, November 5th from 6 till 7:30. I want to emphasize, every time I do one of these live classes, I do record it. So it's a video that you can watch later, watch it 20 times if you want. So you, as a student of mine, you get a recording of all of my classes that I teach you. So through those 2 classes, we're going to go through all the theory. Then the following week, we're going to do some practice of market scanning together. So we're going to spend about an hour for 3 nights practicing market scanning. For those who also, who buy the Active Live course, or the Active Trader course rather, you get a free month of Active Live. If you do the investor course, you don't get Active Live. Active Live is only for my Active Trader students, but everyone gets a free month of that. After that free month, anytime you want to subscribe, it's $195 a month. You can do it 1 month, skip a month, do it the next month. It's up to you. It's not a recurring thing. It's totally dependent upon when you want to do it. So the special offer that I have for you up until Friday, October 30th, is anyone that registers for the Investor or Active Trader course will get these overview classes included. If you do the Active Trader course, you also get a free month of Active Live. And if you do the mentorship, you get another free month of Active Live. So you get 2 in total. Course pricing, this is all Canadian dollars, $2,495 for the investor course, $34.95 for the Active Trader. Notice it includes investor. Mentorship, $54.95, includes Active Trader as well. If you are currently an investor student and you want to upgrade to active, you log in to the Stockscores website, go to the Education Center, And right there online, automated, you can upgrade for $1,250. If you are currently an active trader member and you want to upgrade to the mentorship, you go to the upcoming events page. I'll show you here. Go into trader training, go to upcoming events, scroll down to the active trader mentorship. Notice it says active trader. That's the prerequisite. Now you can buy the active trader tonight and then upgrade to the mentorship as well. It doesn't cost you anything extra to do it that way, but that's what you need to do. And so right here, you can register online. I've got a full list of all of the sessions that we will do. If anyone wants more information on that, I can send that to you. But the mentorship it's 12 weeks of classes, but 1 week we actually have 3 classes because we're going to practice a lot one particular week. So it's 14 classes in total, 14 hours at least of sort of 1-on-20 training with a small group. And you can register right here. If any of you are currently an investor member or an active trader member, and you want to do the foundation overview and the nightly market scanning sessions, you can redo that. If you bought your course 5 years ago and you want a refresher, it's $195 to do a refresher. So you don't have to pay $2,500 again. I want to stress though, if you bought, let's say you bought the active trader course in June of 2020, you don't have to pay this. You'll get this for free because I give everyone that has bought since my last course, which was in May, everyone that's bought since May will get these bonus trainings for free as well. So don't go and buy it if you bought your course since May of 2020. All right. Now, a little follow-up session here or poll that I'm going to launch. And I did this last night as well. So if you answered last night, you don't really need to answer this again. But I don't like to bug people. If you would like a follow-up email after Saturday on the different courses that I do, just answer here in the affirmative. If you don't, say no. No problem. So I'll just leave that up for a moment. And then the next thing we're going to do is get into the economics of today. And then I'll try to answer some questions before we wrap up. So I'll leave this up for another 10 seconds and then we'll jump into the economics discussion. All right, 5, 4, 3, 2, 1. And if you're watching this as a video, because this will be on YouTube, of course, and you want to be included in this, either join me for the Saturday webinar, and I'll put this poll up again on Saturday, or you can fire me an email if you want that email sent to you with a little more information on the course. All right, so we'll shut that down. And let's now, if you want to register, sorry, this is April 23rd. This should be October 30th. October 30th. But if you want to register for the course now, be my guest, just go to the Stockscores website. I'm just actually going to show you. Jump into the Stockscores website, go trader training, learn how to trade. And on this page, there's some videos, more information on the courses, what's covered, and you can order it right here. It's instant access. So once you do this, you buy the course, you're not charged $300 for your annual membership now. That's just the annual fee. We just want to let you know that that is the annual fee to keep your tool. If you choose to, you don't have to. But anyway, you buy it here and you'll have access to the videos right away. You will have to log out and back in again. But if you buy it tonight at 11 o'clock, log out, back in, and you can start the videos and the lessons right away. And it's a good idea to do that sooner than later so that you have some background before we actually start the foundation classes in November. If you have any questions for me, there's my email address. You can follow me on Twitter. I'm at Stockscores. And of course, subscribe to the Stockscores YouTube channel. That's the address for that. Now, let's do the economics of trading. So what I want to do here, today was a very slow day. I only found 3 stocks that I thought were 7 out of 10s. That's not including shorts. I was only looking for the buys. The market, my pre-market outlook was basically in a short-term downward trend. So we want to buy alpha stocks only. Alpha stocks are those that have abnormal volume. We check the chart to make sure they're breaking from a predictive chart pattern. We may consider shorts as well because the trend was down, and so shorts have the benefit of the market pulling a lot of stocks lower today. So we'll go through today's picks. We'll talk about the reward for risk of those trades, how much capital was required, how much profit there was on each trade, and what the percentage return was. So the three stocks were as follows. I showed you these already. CAN, action candle there at 932, abnormal volume, abnormal price, low volatility. Nice move. Finished the day just under 5 RR. All right. Next one was Timber, TMBR. Action candle, strong volume, strong price action, low volatility. Took a while for this one to work, went sideways for a couple of hours, and then went shooting higher at the end of the day. Awesome. Finished the day at about 3.5 RR. That means for every $100 of risk, $350 of profit. And then the final one, NXTD, this came a little later, just before 10:30, abnormal price, low volatility, abnormal volume, up it went. Those were the only three that I thought were good today. Most days there's more, but we're leading up to the election, the market's been a bit choppy and nervous, and I think we're going to continue to have that sort of market up until the election. And then I think after the election, we could get a lot of volatility, depending on who wins. All right, so here is a summary then. This is just pulled off of the active live screen where I show the stocks for the day. So there's the RR at the end of the day. This was the maximum reward for risk. So CAN finished the day at 4.6 RR, but the maximum RR through the day was 5.6. That means for every $100 of risk, you had $460 of profit before commissions and slippage. Now, if we then do the economics of it, this is just a quick little spreadsheet that I built this afternoon. So CAN, for $100 of risk required $4,060 of capital. It finished the day with a $460 profit, but that's before commissions, and we always allow a little bit for slippage. So we had 0.25 RR of slippage, and that meant that our net profit was $435. So $435 for $4,060 of capital used was a 10.7% return. Timber required $1,538 in capital. That was a 20% return. And NXTD required $1,975 of capital, again, for $100 of risk. If you took less risk, then it took more. If you took more risk, it takes more capital. But the return there was 14.7%. So over the three stocks, it required this much capital, $7,500, for a total profit of $1,000, a little over $1,000. That was a 13.8% return for 1 day of trading. That's a very good return. We don't normally get them that good, but it was good today. Even though it was a slow day, if you were picky, fussy, waited for the good ones to come along, it was fairly good. Here is the total performance for the day. It was not a great day on the buy side. Remember, I said it wasn't stock when it was a type of day where you want to be really selective with buys, and you can see a fair bit of red there, but the shorts were pretty decent. We had a very high average on the shorts. 1.56 RR was the average for the day, and that's because we're in a little bit of a downward trend. All right, so I'm going to wrap up there. I will answer a few questions. I've got lots of questions. I probably won't get to them all because we're way over time, and I apologize that it's gone so long. But if you do have questions for me, there's my email address. Some of these questions are not easy to answer quickly. So, for example, how do you avoid selling too early when it goes up and down all day? That's an hour-long lesson that's in the course material on how to know when to sell. What was the $300 yearly fee about? That is for access to the Stockscores market scan tool. Does Stockscores monitor NASDAQ? Yes. The Stockscores active live service only monitors the US markets. The Stockscores website monitors all North American markets. TradeStation doesn't monitor Canadian stocks. So unfortunately for active live, because it's depending on TradeStation, you have to you can't follow the Canadian market. Sorry, some of this interface I have is a little cumbersome, so some of the questions are long and it chopped off half the question. I'm trying to get it to the point where I can read the whole thing. And I will do my best. It's not letting me expound. There, now it goes. Regarding active live, do you always buy into stocks you rank 7 or greater? Yeah, most days. I mean, some days I don't trade because I have to go to the dentist or something, but yeah, generally I like to buy the 7s. You use interactive brokers, but IV is not cheap when you trade many shares at low price, like 4,000 shares at $2. You're right. Yeah. Interactive brokers is not really cost effective if you're trading penny stocks because they charge you by the share. So I tend to trade bigger positions in bigger companies. So I'm not trading 50,000 shares of a 10-cent stock. I trade 2,000 shares of a $40 stock, let's say. So in that regard, interactive brokers is quite cost effective. I also, because I trade a lot, I get a little lower commission. You're quoting a price there of 0.005 cents a share. I believe I pay 0.003 cents a share because they have a graduated pricing structure. The more you trade, the cheaper it gets. So, and again, some of these questions are just going to take a little too long to answer. So if something's really important to you, you can email me and I'll do my best to answer you that way. When the stock you have purchased goes up, do you move stop loss price up accordingly? Yes, but it's not that simple. Again, I have a whole lesson on how we use our exit methods. Someone asking, it might be a stupid question, but you say algorithms, is the only way to tap into yours is to watch your live trading? Well, for day trading, either my live trading webinar every day, or I will give you the algorithms or the simple versions of the algorithms for TradeStation if you are my student. I'll give you the action candle indicator, and then I also have some trend line indicators which you get as well. I have strategies that run in TradeStation, and that's only for active live. To make a career in day trading, do you think having TradeStation is vital, or is active live enough? I have students that do both. So, I mean, if you're only going to use active live, that's great because that's really doing most of the work that TradeStation does. You then still need some real-time charting program to evaluate things. You could use the real-time charting program that comes with your broker account. So that's usually fine. All right. So do I think the new COVID market change volatility is permanent? I don't know. There's so many more people in the market, and that's really what's caused the change. Now, if those people leave, maybe we start to normalize again, but millions of new accounts have been open and it's sort of cool to trade stocks again. So I don't know. I don't see an end in sight, but I suppose in theory, in 5 years, it might start to quiet down again. I can trade any market, it doesn't matter. But it's certainly more action these days. So trading Canadian stocks will not be in any of your scans. Nope. Stockscores covers Canadian markets. The Stockscores website covers Canadian markets. What does not cover Canadian markets is TradeStation. So when I'm day trading, I'm only focused on US stocks. You can still day trade the US markets. You just can't do it with TradeStation. Is it possible to use your market scan without registering to the investor course? Sorry, no, it is not. You have to at least buy the course because I don't want a lot of people using it. The more people use it, the more the opportunity goes away. And so I just only let it be available to people who have taken my courses. All right, so I'm going to wrap it up there. We do have another webinar on Saturday, and I will get into more details about the courses themselves on Saturday. I'll walk you through a little bit more of the education center, what's included, what all these prices are for, and that sort of thing. But you can register for the course at any time. You do that on the website. And again, the deadline to get those bonus training that's coming up in November, the deadline for that is October 30th. If you have any questions, you see my email address on the screen. That goes directly to me. And I hope that I hear from some of you. And I hope that I see lots of you on Saturday as well. Have a great rest of the evening, and I will see you Saturday. Thanks, everyone.